Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Wednesday, May 20th, 2026. After 3 bruising down days, the market snapped right back into risk-on mode. The leaders were crystal clear: semiconductors and the big capital markets banks. But it wasn't an everything-up kind of day. Oil rolled over, energy got hit, and that kept the S&P's move looking a lot more restrained than the high beta parts of the tape. Keep that split in mind today. AI and trading beta up, oil and defensives, not so much. Looking at the S&P 500 heat map, the first impression is just green, broad participation. But the concentration? That tells the real story. The brightest greens cluster in semiconductors, names like AMD, Intel, Lam Research, and KLAC. Financials stand out too, especially capital markets leaders like Goldman and Morgan Stanley. And then you've got the visual counterweight, energy. A pretty uniform red block with names like Exxon and Chevron dragging. So yes, breadth improved, but it came with a very deliberate rotation. That heat map maps cleanly onto the money flow. Capital rotated right back into growth beta leadership, semis, and the broader AI complex. And it showed up in cyclical financials too. At the same time, money came out of energy and a slice of defensives like staples and healthcare. The result was a very intentional feel. Growth plus cyclicals on one side, commodities and defensives on the other, and small caps joining the party. That only added to the risk-on mess. Zooming out, today felt like a pressure release valve. After 3 straight down days, traders paid up for the exact same winners that have been leading, especially chips and AI beta. But the deeper message here was disagreement, not uniform optimism. Energy got liquidated as crude fell, and defensives barely participated. Even inside semis, the market stayed selective. So, the central tension didn't disappear. It's still AI optimism versus lingering macro anxiety. Traders just chose to re-risk into growth and cyclicals for today's close. Here's one notable piece of desk chatter today, and keep in mind, this isn't confirmed data, but a lot of the semiconductor ramp was tied to pre-Nvidia earnings positioning. The idea? Traders were leaning hard into the AI complex ahead of Nvidia's after-the-close report, which probably amplified that conviction feel in chips during the session. That also means event risk didn't go away, it just got concentrated into whatever Nvidia says next. Nvidia, NVDA, was the market's center of gravity. The stock was up modestly going into the print, and after the close, they reported quarterly results that beat expectations on revenue and adjusted EPS. Why does that matter? Because the entire AI complex, chips and infrastructure, tends to reprice off Nvidia's report and guidance. But listen, the important part now isn't the headline. It's how the market digests it tomorrow. AMD was one of the marquee tells of the day. It surged with the broader semiconductor move, helped by the AI and compute momentum bid across the complex. When AMD is an outsized green tile in a rebound, that usually signals the market isn't just nibbling, it's re-engaging risk. And with Nvidia just reporting, AMD becomes an immediate read on whether this chip bid sticks or fades. Super Micro, SMCI, was another massive confirmation signal. It ripped right alongside the AI hardware and infrastructure sleeve, while semis led the session. Look, SMCI tends to trade like high beta AI plumbing, so big percentage moves here often tell you whether the market is truly back in on AI risk. But here's the flip side. This is one of those names that can move the fastest if the tape reverses. Goldman Sachs, GS, was a key reason today didn't feel like just a tech bounce. Capital markets names outperformed as risk appetite returned, and GS ripping? That's often a direct read-through on risk tolerance and expectations around trading and investment banking in a better tape. When Goldman is leading alongside semis, it's the market's way of saying liquidity and cyclicals are right back in the conversation. XOM was on the complete other side of the scoreboard. Energy got liquidated in a macro-driven move tied to a sharp intraday drop in crude. And Exxon's weakness helps explain why the S&P's gain looked relatively modest, even as the Nasdaq and small caps ran. If you're looking for the major crosscurrent inside this rally, this was it. AI up, oil down. Analog devices, ADI, was the standout anomaly today. Even with a euphoric chip tape, ADI sold off on a company-specific sell the news reaction after reporting fiscal Q2 results. It's an important reminder. The market is willing to reward the broad theme, but it is still selectively ruthless when something doesn't land the way investors want. In other words, this was not a free pass for every semiconductor name. Looking ahead, the near-term driver is straightforward. Thursday, May 21st is all about digesting NVIDIA's earnings, and especially their guidance, because that can swing semis and overall index sentiment. Then, on the calendar, CB consumer confidence drops on Tuesday, May 26th, and Thursday, May 28th brings a packed slate: core PCE, preliminary GDP, unemployment claims, and new home sales. The key question into that window? Whether today's rotation into AI beta and financials and out of energy actually holds up. So that's the day. A fast risk-on snapback led by semis and capital markets banks, with energy acting like a massive anchor as crude fell. Now, the market has to prove it. The next session is less about celebrating the bounce and more about follow-through. How do chips react post-NVIDIA? And does the rotation stay intact? We'll pick it up with that tape tomorrow. Thank you for watching CAT-IUS Stock. Stay curious, stay calm, and we'll see you next time.